determined overhead rate is less than the total amount of overhead actually incurred. Remember, our predetermined overhead rate is calculated based on estimated costs, based on estimated hours. Well, if our actual hours and our actual costs are different, we're going to have these things called underapplied or overapplied overhead. So underapplied exists when our predetermined overhead rate is less than actual, and now overapplied exists when the amount of overhead applied to jobs during the period using the predetermined overhead rate is greater than the total amount of overhead actually incurred during the period. So underapplied is less than, overapplied is greater than. The journal entries, and the example we have on the other side, we're going to go through these, but the journal entries, we're going to debit cost of goods sold for underapplied overhead, and credit manufacturing overhead. Remember, for underapplied, our actual costs were less than, so we need to, or the predetermined overhead rate was less than, so we need to put more costs in the inventory because we applied less than what we actually incurred. So we need to put some of that in cost of goods sold, and we need to take it out of manufacturing overhead. Inversely, overapplied, if we put too much to the product, well, we need to take some out of cost of goods sold and put it back into manufacturing overhead. So we're going to debit manufacturing overhead, credit cost of goods sold. Over under applied is pretty, it's a concept that took me a while to understand. Hopefully, when we go through the problem, it'll make more sense because you can see how the debits and credits work. Saying that as an accountant, that may not make sense, but you can watch this lesson over and understand how it works mechanically. And once you understand mechanically, then hopefully you'll be able to perform the homework and the problems on the exam if you don't understand it conceptually, but understand it mechanically. T accounts. So A, you remember debit material purchases, and then when we apply it to manufacturing overhead and work in process, we're going to credit. A manufacturing overhead, when we apply it to indirect materials, indirect labor, other overhead, we're going to debit it, and then as we apply it, we're going to credit it, and we apply it to work in process. So as we apply and as we transfer direct materials, we're going to debit direct materials, debit direct labor, debit overhead applied, and that's all in work in processes. And as we finish stuff, we're going to transfer it to cost of goods manufactured, F, and that goes up to finished goods, right? And so we're going to debit cost of goods manufactured, and as we sell finished goods, we're going to recognize it as cost of goods sold, and then salaries and wages, as you see, as we direct labor, indirect labor, as we incur those, we're going to recognize liabilities. And then cost of goods sold, as we sell goods, we're going to debit cost of goods sold. So this T account, these journal entries embody the schedule of cost of goods manufactured from lesson 1. Let's flip this over, go through. All right, lesson 2, retake. So we're on the back side of the lesson 2 cheat sheet. So we're going to start going through with the job order costing documents. Now on the other side, we talked about the materials requisition form, the direct labor time ticket, and the job cost sheet. Well, now we're going to go through an example of using those. And so we got some given information. Given information is Round Valley has an order for 3 12-foot sailboats, and it's a special order. And so attached to this job, the special order or a special job, the job number attached to it is 12 with a single quote, 12 foot, 12 single quote 685. So that's the job number, and that's how to that job number we're going to assign all these costs, and that's how a job order costing system. That's how the costing system works. Is you have a job number, and then you assign all the costs to it. So let's go through the costs. All right. First, there's some additional given information. Assume HMS Round Valley Inc. applies overhead to jobs based on direct labor hours, and the total estimated direct labor hours, and the estimated total overhead for the year is $3,486,000. Assume the estimated total direct labor hours for the year is 290,500 hours. Round Valley's predetermined overhead rate is $12 per direct labor hour. So the $12 per hour we calculated, right? On the other side, we saw the predetermined overhead rate is equal to the estimated total manufacturing overhead cost for the period divided by the cost driver or the allocation base, and that in this case is direct labor hours. So we divided by the total direct labor hours, the 290,500, and then we get $12 per direct labor hour. All right. So the first thing that we're going to look at is the materials requisition form, and direct materials go into that materials requisition form. On the other side of the cheat sheet, we have the job order cost flow and how those documents flow. So the first thing is direct materials go to the materials requisition form. So let's look at the materials requisition form. Remember, the job number is 12 foot 685. So we're going to assign a number to the materials requisition form. That number is 12 foot 685-1. So that's the materials requisition form. Now we need to request some materials to build these 3 sailboats. And so what we need is a 12-foot fiberglass keel hull. We need a 12-foot fiberglass keel hull bow panel, and we need a 12-foot fiberglass keel hull mast mount unit. And the quantity, since we're building 3 sailboats, we need 3 of each of those. The per unit cost is the 219, the 63.50, and the 48. So the extended value is the 3 times each of those is the 657, 190.50, and the 144 for a total direct materials cost of $991.50. And that flows, remember on the other side we talked about the materials requisition form flows to the job cost sheet. That flows to the job cost sheet. If you look at the job cost sheet, which is this bigger document down below in blue, it is right here there it says direct materials. And remember, this is for the job number is the 12-foot 685. That's the job number of this job cost sheet. And then we look at direct materials and we see the rec number, which is the 12-foot 685-1, and that's the 992, which is rounded. But so that's how the direct materials flows to the job cost sheet. Now let's look at the direct labor, and from the other side of the cheat sheet we saw that in the job order cost flow and the documents, direct labor goes onto the labor time ticket, right? The labor time ticket is what we have, and we see that this employee worked from 8 to 12, and then from 1 to 5, 4 hours each of, he took a lunch. So that's 8 hours, so he worked one day, 8 hours, and his rate is $15 per hour, and so that total is $120. And he's assigning it to a specific job, and that's our job number. This is that special order. So it's the 12-foot 685. And so those, and if you remember from the other side of the lesson, the cheat sheet too, you see that the job order cost flow, you have the direct labor that goes to the direct to the labor time ticket, and that goes to the job cost sheet. Our job cost sheet, right in the middle of it, you see direct labor ticket number 2 at the top of our time ticket. You see it's a time ticket number 2, and so all these documents need to flow together. And then you see that from ticket number 2, there's 8 hours, which is $120. All right, so that's how we get the direct labor and then the direct materials to the job cost sheet. Now we need to apply the overhead. And if you recall, our overhead rate is $12, and our allocation base, or our cost driver, is direct labor hours. So that was 8 hours. So the 8 hours times the 12 gives us our amount of our cost of overhead to apply, which is $96. So we come up with a total cost for all of the 3 products of $1,208. And so the per unit cost is 400 and some change, and that is our per unit cost for this cost sheet, because there's 3 sailboats, so we take the 1,208 divided by 3. And that's how and that's the example of the documents and how the documents flow. Now, let's get into another example, and this is a different example, different given information, but this is going to take us to the journal entries and T accounts, which on the other side we saw the examples of those T accounts. Now, without numbers. Now we're going to put some numbers in there. We're going to calculate those amounts, and this is similar to the schedule of goods manufactured from lesson 1, but it's in journal entry form now. So let's read all the given information first, because there's a lot to it, and we're going to take bits from each. But this is a typical problem you're going to see. We're given all this information. It's best to read all the information first, because you're going to use different parts to calculate different things. So let's go through all the information first. A. At January 1, Round Belly had beginning raw materials inventory of $36,000. During the year, Round Belly purchased $3,245,000 of materials. At December 1, Round Belly had 42,000 raw materials inventory on hand. Sounds like the schedule of goods manufactured, right? We got beginning, purchases, ending, and so we can calculate what was used in manufacturing, right? Similar to what we did in lesson 1. B, at January 1, Round Belly had beginning work in process inventory of 72,000. During the year, direct materials at $3.1 million were transferred to work in process. During the year, total job order direct labor hours of 67,580, costing 1,680,500 were incurred. Roundbelly uses direct labor hours to apply manufacturing overhead. All right, that's similar to the example on the job cost sheet. The predetermined overhead rate was estimated to be $7.50 per direct labor hour. At December 31, ending work in process was estimated to be 48,600. So, similar to the schedule of goods manufactured, it sounds like we got a beginning work in process. We add some direct labor, we add some direct materials, and then we have this ending work in process number, but we don't have the manufacturing. We're going to get that in the next one. So, at C, during the year, Roundbelly incurred indirect materials costs of $139,000. Indirect labor costs of $93,000. In addition, during the year, Roundbelly incurred other overhead costs of $24,000 for insurance, $13,500 for property taxes, $182,000 for depreciation, $40,000 for rent, and $32,500 for utilities. Like I said, those are all indirect costs because we can't necessarily trace them to a specific product, but we know they were used as part of the manufacturing process. So, sounds like looking back to the schedule of goods manufactured, we're going to need to apply those somehow to work in process to get what our ending finish, or so that we know what our cost of goods manufactured for the period were when we transfer into finished goods. All right, D. January 1, Roundbelly had beginning and finished goods inventory of 26,500. At December 31, ending finished goods inventory was 31,900. All right, this is starting to sound familiar. This is schedule of goods manufactured, but now it's going to go in a journal entry form and T account form, and this is specific for a job order costing. And E, during the year, Roundbelly had sales revenue of $8,263,400. In addition, Roundbelly incurred non-manufacturing costs related to salaries expense of $450,000 and advertising expense of $63,000. Non-manufacturing costs. Remember, non-manufacturing costs are expensed as incurred, so those journal entries we're going to have to record. But remember, those are expensed as incurred, so they're not as a part. Those are period costs. They're not part of the product costs, and they're not a part of the manufacturing or inventory. All right, so let's start by going through the T accounts, and we'll do it simultaneously with the journal entries. Starting with the